Hello, everyone. Welcome back to How to Trade. I'm Shane Vernier, and this is the Monday Open. And today we're going to be talking about the 920 EMA crossover strategy. We're going to show you a coded version. We put out a video last Friday that shows you how to use AI to code this strategy. Well, we've also got the basic strategy. We're going to trade it two ways. We're just going to trade it in basic terms, and we're also going to trade it with RSI confirmation. So it's good to see everybody back in the room. We're going to do a little bit of a market scan as well. Remember, if you want to get into the markets with a little bit of meaning, be sure to check Switch Markets out. We had a great great. This is our partner broker Switch, got everything, but we had a great question in the live chat in the room, and the question was, Shane, I'm in the United States, Switch Markets does not service us. What do you recommend? Well, our partner broker, or excuse me, our recommended broker is going to be Oanda here for American clients. So you've got a double dose. You got Switch for your international clients and locales, and you've also got Oanda. So you're going to want to check those out. Those are pretty good brokers and a nice place really to begin your trading career. If you have never traded, or if you're looking for a new trader, or excuse me, a new broker, you can definitely get into that. So we've got a lot going on today. I mean, we've seen the markets crash. There's reports of a 100,000 peacekeeping force coming out of NATO going into the Ukraine. A lot of skepticism there. We're seeing mass deportations here in the United States. The Trump doctrine is up and running. We're also seeing threats from the United States Federal Reserve about holding interest rates higher for longer. It's going to be interesting. The big story today was some stuff on the OpenAI front that theoretically is creating a lot of these chips, and they're doing things that are sort of local to the AI sector, a lot cheaper than we first thought, and we're seeing a major correction in the NASDAQ. We're off about 3.5%. We also, we're seeing a big-time correction in U.S. crude oil, about 2.5% off, and gold. I watched a real rotational gold market almost all the last week, and then we got the big break today. You're off about 1.5%, trading right down. I'm watching gold futures 27.35-ish right now as we talk, and I'm in that 30 area, 27, 29-ish. Should set up as legitimate downside support, potentially a bottom for this trend day, but it's ugly out there. I mean, my screens are red. They're blood red, but I have to tell you that when we get big moves like this, it's just a matter of being patient. Today was a great, an absolute great trading day for me. I was in and out in about 2.5 hours. I hit my daily profit target. Took one last trade, took a small loss on it, and then exited stage left. I can't wait to trade the rest of the week. I think this is going to be a blockbuster week, probably one of the biggest that we've seen in a while, because Jay Powell is going to throw the markets a big-time curveball on Wednesday. We'll have it all for you on FOMC Live. So good to see everybody back. Tuka, good to see you. Mark Corp, how you doing? Bryn 98. Bryn had a great question earlier today about the US 100 and the NASDAQ, and it's a fantastic question. It's like, is this the beginning of a big correction, or are we still buying dips? What are we doing? I think that we're going to go ahead and see what develops here in the next day or so, but I'm buying dips still. I'm buying dips. I don't necessarily know how low this market's going, but I have been sort of skeptical about, I've been skeptical about exactly what happens to the markets if we don't cut interest rates. I think you're going to see a big crash. I think that's what's driving today's action too. So let me see, Mark Corp, did you use DeepSeek? No, I just used ChatGPT to do the coding, and this was our final product. So you can see right here, we sort of got everything coded. We did 3 functions. If you guys didn't see the video, if you saw it, great. If you didn't, that's fine. We're going to show you where to find it here in a second. And our functions were very simple. We wanted to shade the area between the 9 EMA and the 20 EMA. We also wanted to code. We wanted a nice gold bar on a buy signal, and we also wanted to have a nice purple bar on a sell signal. A buy signal is going to be the first bar with a close above or right after the crossover. So when the 9 crosses over your 20 EMA and you get a close above that, that's going to be your buy signal, and then your sell signal is when you're going to get a nice purple bar, and that's going to be your sell. What happens there? 9 EMA crosses beneath the 20, and you're looking to sell. So we coded all that in the video, about 10 minutes. Took a little while to make, but it's a pretty easy watch. So go ahead and check that one out. That one dropped on Friday on How to Trade Calm YouTube TV. And then also we've got Forex Signals TV. We put our trade idea of the week out, and that's going to be a Euro USD sell from right up. We're off about 75 points, 100 points from that entry, but that entry could definitely come into play anytime. So right here, I'm looking at the US 100, which is the NASDAQ. The NASDAQ 100, and you're looking at that on a 15-minute chart. In my view, you probably want to be short if you do get an opportunity. So right there, you've got the 9 EMA working on crossing over that 20, and once it crosses the 20, you could sell it. I would be very surprised if this one didn't produce some good positive price action, just because the markets are so heavy. A lot of people are trying to pick bottoms right now. And the thing about picking a bottom is, boy, you better be right. So if I was looking at the US 100 and I was considering picking a bottom using the 920, I'm going to show you how to trade this strategy in a second. 30-minute chart, I'd be looking for a 30-minute chart, and I would want that 9 to cross over that 20. And as soon as it does, that pretty much would be my entry point. One last thing. I always get asked this. I get, Shane, these indicators are all lagging. They have no predictive value. I love price action. Well, I love price action too. That's what pays us off. But here's the deal. Sometimes indicators can suggest what is possible. I'm not trying to talk in riddles, but look at that. Last Friday, US 100, 9:30 a.m. my time, 11:30 a.m. on the East Coast. Look at what you have. You got a purple bar, purple 30-minute bar. Bang. If you took that short, you're rich. You got out in front of a big-time move, and I mean, you're just stacking chips and going hunting for Bugattis. Me, I'd probably go buy one of those new Chevys or a new Dodge Ram. I like pickups better than cars. But if you see something like this developed, wow. Do indicators have predictive value? No, they don't. Nothing knows when the market's going to move and how far it's going to move, except maybe if you're Nancy Pelosi. Then you know, because you've already been told what's going to happen by everybody else in the Senate. Okay, I get it. But what an indicator can do for you is it can give you a hard stop-out point. And in this world, that's really all we can do. That's the number one part of trading. Know when you have to get out of the market. Now, if you have the wherewithal, the fortitude to take a short and then carry the NASDAQ short home over the weekend, and you have the margin money, and you've got all that jazz, and you're ready, and you're looking for a big clean, well, boy, you got it today. And the 920 could have helped you position trade it. Is a 30-minute a good way to do that? Could be. 30-minute signals during the U.S. session. Definitely could be picking tops and bottoms, weekly tops and bottoms. That is absolutely possible. Building a strategy to cash in and capitalize on that is going to be hard, because the one thing that nobody knows is how far the market's going to go and what the follow-through is going to be. That's the reality of this strategy. That's the reality of trading in general. So a couple of things else we want to talk about. Netflix. This one was brought up to me last week. It's good stuff. Absolutely good stuff. I think we're going to fill this gap in. I think if you had a Netflix CFD you're trading, you probably want to be looking to short this thing down to about 946-ish. You want to fill that gap in. Remember, 3 rules of trading. Gaps get filled, gaps get filled, gaps get filled. That's what you want to be really thinking about. I don't necessarily know if price blows through the gap and we go down and trade down to this market structured 840. I'm not saying that, but I'm saying right now we're trading 969. There is a high probability that we trade down and test out that 950 area, maybe 947.50, right in the middle of that gap. I think that's a very high probability. Now, as far as our 920 goes, check it out. Gap up, 9 crossed over the 20, and what do you have? Well, there's our signal. There's our gold bar. So that would be a buy. You'd be looking to buy, trade the 920. For me, I would be very skeptical. And if, in fact, I was going to buy this and play this thing to the long, I would either wait for a pullback down here to my moving averages, or be doing something like this. I love Fibonacci's. This is my weapon of choice. So I'd be looking probably for a pullback down in this zone, maybe 940, something like that, maybe 935. Just have to wait and see what the daily range is and exactly where I can get long with a little bit of meaning. Love it, though. Maybe in a day or two, that right there, maybe that 9 EMA is going to intersect right there at our 38%. We get a pullback there. Our gap gets filled, and then we're just partying right up there to about $1,000. I don't see any reason for these to really correct right now, especially something like Netflix, which is cash heavy. I mean, they have a tremendous amount of cash. They're buying WWE events. They're putting on Tyson fights. I think they were talking about buying a couple of Costner's movies that have been mothballed, Kevin Costner's movies that have been mothballed for like 30 or 40 million just to run on their platform. So they are cash heavy. Netflix is probably in a great position to weather the storm, where some of these chip makers like NVIDIA, it's a bloodbath right now, but we'll take a look at that a little bit later on. All right, guys, time for the strategy tutorial to begin. If you have any questions at all and you want to ask me about a market, go ahead, fire away. We'll cover those right at the end of the stream, about 20 minutes or so. We do have a trade idea out today. I'm going to cover that tomorrow because I don't believe it's going to come into play, but we do have that listed in the trading room. So remember, just follow me in the trading room and you'll be sure to get all these trade ideas beamed out right to your email inbox. All right, 920 EMA. If you guys haven't seen this video on YouTube, feel free to check it out. This is essentially what we're going to be doing here, and we're going to be looking at making trades, and we're going to see if we can't make a few trades. I think that we're going to have an opportunity to do just that on short time frames. What do we have here? Very simple. The 9 EMA crosses over the 20, we buy the market. When the 9 EMA crosses under the 20, we sell the market. Now, what should we be thinking about in terms of how to be successful doing this type of trading? Number one, we don't know how far the market's going to go. We don't know. Listen, I was trading a very, very tame rotational crude oil market today. It was very tame early in the session, had 2 beautiful scalps on really tight rotational trading. And then, all heck broke loose, and we've seen a stiff downtrend, brought some good trades into trade, counter trend scalping. But right now, we did not see this type of market developing during the U.S. session, and it has. Markets are scared of the Fed. Now, how can we qualify that? It's tough to get in on that trend just with like a 920 or something. We almost have to have something to filter it, meaning we need to be looking towards one side of the market or the other. The RSI, typically that's going to be the confirmation tool that I use on these live streams. The reason why I use it is I believe it is the easiest confirmation tool out there. You're either overbought or you're oversold. And when you're overbought, you're looking to sell. And when you're oversold, you're looking to buy. Above 70, you're overbought. Below 30, you're oversold. It's that easy. That's why we really lean on the RSI here, because it's easy. Now, we can talk about MACDs and crossover and convergence and divergence and all that, and maybe you'll find something that's more effective. Maybe you will. Maybe you won't. For me, the absolute best trades are always the easiest. They're always the easiest. And the strategies, my personal strategy that I use is easy. It's as easy as I can make it. It's based on key numbers. It's based on, I got some range figures I throw around. I also use Fibonacci retracements and a 13-period EMA with some Bollinger Bands. It is easy. Now, maybe I just think it's easy because I've been doing it for 13 years now. But your strategy, don't be afraid of easy. Don't be afraid of easy. Everybody gets, I gotta be hard. I gotta be complex. I gotta do all these nuanced little things. No, you don't. No, you don't. The richest traders out there are the ones that kept it the easiest. Guys like Buffett are worth billions and billions of dollars. And the reason why is because what they do is easy. They buy. They buy undervalued things. They get out of companies that they think aren't going much higher, and they buy pullbacks in companies that they believe are legitimate growers over the long term. It's easy. What they do is not hard, guys. It's not hard. They just have a ton of money. Buffett and Berkshire, they got a ton of money. In any case, this is the video that we put out last Friday, and that's what I just showed you, the AI coding. Be sure to check that one out if you haven't already seen it. The AI version of Shane, I love it. No crow's feet. Don't have the crow's feet. Don't have the dark circles there, and also got a little bit tighter jawline. This is probably about 28-year-old Shane, not 45-year-old Shane. That's for sure. But check that video out. I really like that one, and this is sort of the point of the video. This is what we did. We coded a sell signal, which was purple. We coded a buy signal, which was going to be gold. And we also coded our trend strength. The trend strength is a big deal, especially if you're trading these crossovers. Let's go ahead and show you exactly how we're trading them. So we're going to go ahead and look at this Euro USD. Now, this is going to be a daily chart. I wanted to pull this one up because you could see that we've sort of had an interesting ride here in the Euro USD. This is going to be our trade of the week. I'll show you that in just a second, but it's one of these that we're definitely in a stiff downtrend. And about the last 2 weeks, we've seen a bit of a pullback here. Now, I don't think the pullback's going to last. I really don't, especially when Jay Powell, after he speaks on Wednesday, you're going to see something a little bit different than what we're used to seeing. I expect to see a combat of Jay Powell. So right here's your daily chart. So we're looking just for a trade. So the first thing we're doing if we're using RSI confirmation is we're looking to be in overbought or oversold territory. That potentially will give us an opportunity to get either short or long the market. Now, here's a couple of things that I would definitely suggest. Number one, I won't say never, but sometimes, most of the time, 95% of the time, you're not going to be able to get into a trade where you're in oversold territory and you're going to get the sells, or overbought territory and you're going to get the sell signal. You're probably not going to get that. You're going to have to wait. You're going to have to wait for price action to get established and our crossover to develop. That's pretty much what we're going to have to do. Now, if we look at this chart, we're saying, okay, well, we were looking for a sell back here. We were up over 70 back on the 20th of January. It didn't really develop. Okay, we're going along. Did we get into oversold territory back there last Thursday, or overbought territory last Thursday? I say it wrong every time. Did we get above 70 last Thursday? Yeah, 70.11. Okay, so right there, what are you looking to do? We're on a sell now. We're on a sell. Why are we on a sell? We're an overbought. We're still sort of in the upper quartile of this RSI. Potentially, we're looking to sell. 4-hour chart. 9 has to cross the 20, and then we sell it. So right now, we don't have a trade. Now, let's take this right down to brass tacks. Let's go to a 5-minute chart. This type of a strategy on a 5-minute chart, or maybe even a 1-minute chart, is going to be, you're going to be extremely active. Let's say you just chose 3 or 4 markets. Put them up on your DOM, or excuse me, your screens. If you got big screens like me, it's not a problem. You could easily look at 4 of these things and just be looking for overbought, oversold. What do we got? A crossover. Now, if you look at one market, if you're just starting out, highly recommend looking at one market. The problem with that is you probably get bored because this strategy is so easy. Right there. Oversold territory. Now, you'll notice 5-minute chart really going back to about 1:55 a.m. during the overnight, my time, right after that London Open. You've been in overbought territory about 3 different times. So right here would have been your kill shot about 6:05 a.m. my time, about 8:05 a.m. Eastern. a great time, an absolute wonderful time to be trading currencies. Why? During that London-New York overlap, we're going to have a video drop this Friday on ICT kill zones. It's going to show you exactly how to add the kill zone indicators to your chart and what you're looking at, the best times to potentially be trading. And for me, the London-New York overlap is huge. Definitely want to be looking at something like the Euro USD during that period. And look at what happened. We were in overbought. I did it again. Overbought territory. You're overbought when you're over 70. Overbought. We're looking to sell. Where's our sell at? Right there. Right there. Absolutely fantastic stuff. There's your sell. Where's your stop loss going to be? I'm a big believer in market structure when it comes to stop losses. So right there would be your cross. That's going to be your sell. All right. What else do you have? Your stop loss is the second part of your trade. Now, you can either play this real tight, maybe above your trigger bar. You can do that. I'm a big believer in the previous swing higher, swing low, especially if you're trading on one of these Forex pairs on short time frames. That is not very far. 105.25 to 105.16 gives us about 9 pips. You got an opportunity there to get the short, and you can see you knocked it out of the park. You really did knock it out of the park. So what was to our advantage there? Timing. The timing was wonderful. We had high volume. We had a lot of action with the USD. Traders getting back in the office. You also had the London traders are there. The U.S. traders are there. There's a lot of volume there, and there's a lot of market depth. That is what we want. That is when we want to be taking our trades. We don't want to be trading a Euro USD 5-minute chart on a crossover. You don't want to be doing that probably right now. That's going to be really difficult because things are drying up as the trading session moves on. We get after that London-New York overlap, after that London close, things start to really taper off in the currency markets. You got to be very careful doing things in the afternoon here in the United States. Maybe it's better to wait for tomorrow. Just a thought. So that was an absolutely fantastic trade. So if you were using our coded coded construct here that we built last Friday, put it on the video for you. 5-minute chart. Not a 3-minute. I don't know anybody trading a 3-minute chart. I really don't. 5-minute chart. What do you got? Should have a purple bar on our sell. And there it is. There it is. So if you have all that stuff coded in there, then it's real easy to look at this 920 and trade it. You're saying, okay, the distance between the 9 EMA and the 20 EMA is wide. What does that mean? When the distance between those two EMAs is wide, what does it mean? It means you're trending, and you're seriously trending. That's a trend strength indicator. Not too many people talk about that. That is very important. If you've got a real wide space in between your 9 and 20, it means you're trending. All right. What happens when you get a real narrow space in there? It means the market's starting to consolidate and flatten out. Take a look at this. Right in here, they get very, very narrow, but look at this. Wide, wide, wide. Why? Because you're trending. Right there, you're getting narrow. That means that we've got a crossover. Once we get a crossover, sell, purple bar majesty. We're selling it. If we're on a buy, then we're looking to buy this thing, and you get the gold bar, and you're able to buy it. The number one thing that you need to remember when you're trading the 920 EMA strategy, if you're not going to use something like RSI, and even if you are going to use RSI to confirm trades or to filter trades, time of day. Time of day. Absolutely critical. You've got to understand when something like this on a 5-minute chart will actually work, because there's times that you don't do this. And this one, take a look at this. Okay, you got a buy signal right there. Did that do anything for you? No. Why didn't it? Because there's nobody in the market. This was last night, shortly after the electronic open. My time. Look at the space. Look at the space in between these. Right there, you got a sell. You got a sell signal right there. You got a few pips. Then look, you got a buy right there. Then you got to sell, and then you're on a buy. It doesn't work because the market is flat, the volumes are low, and there really isn't any direction in there. And if there's no direction, you're going to get chopped to death. Highly recommend avoiding things like this. Focus on the best times to trade. Check out that ICT kill zone video that's going to drop Friday. That one really is going to give you a place to begin. If not, we've got some other videos on Forex Signals TV that talk about the absolute best times to trade. And typically, it's all around the market opens and closes. And there's a few you should be aware of. Number one, the Tokyo Open. You should be aware of the London Open and the New York Open. Those are the 3 biggies. Also, if you're trading maybe the Australian dollar, you need to be looking at the Aussie Open as well. That's 4. All right, that's 4 different opens. You need to be ready too during those overlaps. So like the Aussie Tokyo overlap, typically that's right after the Tokyo Open. You need to be watching that relatively closely for that added volume. And then the London New York overlap, watch that. It's all on the video. So be sure to check that one out. something like this can work. So like if I was going to trade US dollar Japanese yen, all right, and I wanted to trade a 5-minute chart, could we do it right now? Well, looks like it. We've got a buy signal right here. So let's go ahead and pull up our DOM, our trading DOM. What do we want to do? We want to buy the market. Now, do we want to buy right here? We could. We could buy right now. Let's go ahead and send them and see what happens. Okay, there's our buy. I don't want a limit order, though. This would just be a flat market order because I want to get long. So this would be my buy order. Ignore the leverage. We're just placing a trade right now. There's your long. Your long is right there on that bar's close. There's your buy signal. You're looking to go. Now, what we're going to be doing in the near future is I'm going to give you sort of a crash course on how to improve your entries. I get a lot of people saying, man, my entries aren't very great. Well, they aren't very great because they're based on just a raw technical strategy with lagging indicators. To make your entries great, it could be a function of maybe pullback, wait for a pullback to those moving averages, maybe put some Fibonacci retracements on there, which is pretty much what I would do, and look for intersection between those moving averages and something like your Fibbies, or maybe identify support and resistance levels using your market structure. What about something like this? You see right here, you've got an order block. A lot of people love ICT formats. I hear all the nomenclature all the time. So if that in fact is your order block, that's your break of structure. So you broke above that swing high. You broke above that. Where could you go long and maybe be a little bit better off? Maybe down here in this doji, maybe this order block right here gives you a shot to get a little bit better trade location as opposed to potentially buying, the top of the 5-minute market. Now, what I would say to all that is I'd say, listen, we're playing a 5-minute market on the dollar yen. How big is the range? 154.21, and then you're going right up there to your tops, 154.44. So you've got about 23 pips. It's not the risk of the century. So would I be really wanting to fine-tune my entry point? You might be trying to get too fine there. You might be, but like on longer time frames, 4-hour charts, 30-minute charts, you bet. You want to do that because if you wait just a little bit longer, you may get a better entry. And if you get that better entry, you don't risk as much and you could potentially make a little bit of money on the backside where maybe you wouldn't have made as much with your conventional entry. So let me see. Hi, Shane. Do you have the code for that strategy? Yeah, I got it somewhere. I actually recoded. I coded on the video, we coded it a certain way. I went through and actually coded the shading area. That's the same. The gold and purple bars after the EMA crossovers. That's the one where I just put them both together. So I don't know. We would go to our Pine editor. Let me see what I got on my Pine editor here. Yeah. So like, let's say we wanted to click on that gold and purple bar. Yeah, we're working on it. This isn't the one that's working right now, but this script right here. Yeah, I've got the scripts. I just don't really know how to cut and paste. I guess I could send some screenshots of the script and you'd have to enter it yourself. But if you try to cut and paste these using like Google Sheets or something, it doesn't work. It gets all jumbled up. It's got to be the spacing and everything's got to be just right. The punctuation has to be just right. So maybe we'll post those, get a PDF and post them somewhere. I don't know. Let me see. Favorite Peters. I'm enjoying this. I can't wait for Friday. Well, it ought to be interesting. This ought to be interesting. I think that we're going to be in for some real trading. FOMC Live, though, Wednesday is my headliner event. And then we're going to go ahead and scalp later this week. We got a lot. We've got a 10-minute trading strategy blitz. That's going to be on Wednesday, and that's going to be at Forex Signals TV and also here on How to Trade. So check it out. We're going to be doing a little tick scalping right here. You can see we're getting crushed. So my question for anybody out there that's trading the 920, and some of you are, if in fact you are trading this, what exactly is your best entry point? If we did some back testing, what would we be doing? I would be saying, okay, I want to know what percentage of the time does my gold bar, does that thing pull back? Meaning, that's my buy. According to the strategy, that would be my buy. So everybody worries about profit targets and all that. Here's what I would recommend. Focus on the stop loss and focus on this pullback. How often? Does it pull back 70% of the time to your moving averages? 60, 80? If in fact it does that and you still have a decent winning percentage, then you've got an opportunity to streamline your entry and you go, okay, there's my signal, there's my pullback. Okay, I got great entry. Instead of being long from up there at 154.43, then we're long down there at 154.35, and we've just cut our risk way down, theoretically keeping the same odds of victory if we pull back consistently to the moving averages before we move. and that's just a function of back testing. You can do that by hand. This code makes it real easy to do that. You just look at, okay, there, we're on a buy. This is exactly what I'm talking about, improving your entry point. There's your buy, all right? There's going to be your buy, pulls back, fails right there in the moving average area, and then jams higher. How many times does that happen? Is it 90%? Is it 100%? On a 5 minute, on a 1 minute, on a 4 hour? That's where you can actually back test and build yourself a strategy that's worth more than the paper you recorded on. I mean, it's the truth. I spent years back testing proprietary indicators and strategies, literally years of my life. And I sat there and I did this stuff longhand. We tried to hire programmers to automate it, yada, 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 whatever. Bottom line is this: 9 out of 10 of our studies where we tried to find tendencies with our indicators weren't worth the paper that we wrote it down on. They were garbage. They were all backfitted data. But if you think about how you can make something better, and if you look for tendencies after a signal, something like that could be really good. Now, right here, didn't work. Look at buying. We bought. We didn't come back. We missed the big rally. So right there, we didn't work. But maybe this bar was too big. Maybe this range of price bar is too big. We don't even take those trades. All that can be figured out in back testing. It really can be. Now, something like this, all right, there's your sell signal. Sell, bang, pulled back immediately. So we could have been short from here, stopped ourselves out here, and really cut down our liability a little bit. It's all about risk versus reward. That could be a pretty good way to approach this type of strategy. This is an interesting yen trade. I don't know if it gets up or not. Let's go ahead and see if we can find a few more trades. Let's go out to this gold market. Now, gold, you're on a daily, a big daily sell-off. That's worthy of note right there. This would have been your crossover buy without any, I guess, what would you call that? Any confirmation. There's your crossover buy there. You're to the long. There's your pullback. Yeah, a big move. So you hit an absolute home run there on a daily. But look at what's happening now. Now we're pulling back a little bit. So we got a big sell-off today, off about 1.3%. Your pullback, you go right to the 9 EMA and you bounce. It's pretty good support zone. So the first thing I would be looking at doing right now, if I was trading, and I already traded gold today, but if I was looking at maybe trading spot gold here, what would I look to be doing? Okay, this is a weekly chart. We don't really have anything on the weekly. We had a buy way back there, but that's ancient history. Spike low, spike high. Let's run some Fibonacci's and see what we can come up with. That's a pretty good bid. That's probably going to be a trade idea for tomorrow, I would think. Weekly pullback, 27.13. That's solid. I'd be looking at 27, probably 27.15s there. Look to get long and grab yourself $5 or $10 on that trade. But take a look at our pullback here. This is why I really love the idea of using something like a Fibonacci retracement and the 920 and combining them. Look at this pullback, 26.90. That is robust support. We've got our 9 EMA down there. We've also got a 50% retracement. I don't love 50%, but pair it with a 9 EMA. Not bad, not bad. Okay, what would be the third clincher, though? What would be more evidence for us? Look at the trend. Look at the space between the 9 and the 20 and the trend. Bottled up, started to come together. Our shaded area decreases right in here, and then it starts opening up again. We're in an uptrend. It's all about buying in. It really is all about buying. The question is where do we get in at? And me, I'm a stickler for trade location. I'll hold out all day long until I get my trade locations. But once I get them, the leverage goes on, and we make our trades. We're confident in what we do. And a trade idea like this, I'm going to be scalping 27.15, somewhere in there. But also that 50% zone, somewhere around 26.90, where that 9 EMA comes in with the 50% line. That's a monster. That's a monster. So I'm watching this closely. And you say, Shane, it's on a weekly chart. And I go, yeah. Because when we go now, let's take a look at gold on a 5-minute chart. Should we be buying? Well, I can tell you right now, we had a sell signal back there at about 5:20 a.m. my time. Absolutely huge move. I mean, that sell signal. This is one of the things about this 920. If you get in on a trend day, when life's good and the market's trend, odds are you're going to be in on it, and it could be really a big move, and this is exactly what you got today. So now look at what's happening. You're fighting a stiff trend. Right down here, you had sort of a spike low, swing low down there at 2730-ish. Yeah, it looks like that number already went. Darn it, that was going to be a trade for me today. That's all right. Crossover right there, 9 crosses over the 20. You're looking to buy this thing. So if, in fact, we do get the crossover to fully develop here in the next 4 minutes, that's going to be your buy. Is it a good buy? You're fighting a trend. So that means that if you did pick today's bottom, I mean, there is a lot of money to the top side of this thing. I would definitely respect that. But something like this, my stop loss would be very tight. I wouldn't mess around with this, especially not with a trend as strong as it is today. So if you put your stop loss right down there, and then your profit target just becomes a function of interpreting price action. You could shoot for that area right there if you wanted. You could shoot for that right up there. You could take a position for the rest of the week, see what happens. The biggest thing is you got to know when to get out and pull the plug on it. And you can see right now, it looks like this could actually develop. 5-minute chart. Highly unreliable, highly volatile. Just remember with gold, it's been a seriously active day. The problem is that we're going to go into that period of time, going into that late day here in the United States trade where the market dries up and there just isn't anything there. That has been happening to gold a lot lately. Let's check one more thing on gold. There's your confirmation. We didn't even have to check confirmation. We should have known that from the trend, but oversold territory that came across back at a 10:10 my time. So what about an hour, 20 minutes ago? And now you're just rocking and rolling higher, and you're looking to get that crossover. That 9 EMA crosses over, and it's a buy. It's a buy right now. The only thing that I recommend on this trade is to really watch your stop out point. If you're aggressive, you can stop yourself out down there beneath that spike low, beneath that one, or the broader market state. If it was me, why? Because we're trending. This market's either going to reverse or it isn't. And if it doesn't, you don't want to be around. You don't want to be around. All right, everybody, that's pretty much the 920 in a nutshell in there. Look, we got our really a nice, big, beautiful bump. Great, absolutely great formation right there, sort of a bullish pennant on the 5-minute and then the big break. So, it paid you off right there on the Japanese yen. Once again, the leverage, I don't care about the leverage. It's demo. It's all about just getting the structure and the really the format of the trade. That's really what we want to do here. Really what we want to do. All right, let's see. Please, sir, will the kill zone video come with the pairs to trade during the session too? I didn't really cover the pairs to trade, which products to trade, but it really is fairly straightforward. Like if you're going to look at the Tokyo kill zone or the Asia market kill zone, probably going to be looking at the yen. Probably going to be looking at the yen, the Kiwi, the Aussie, those regional pairs. You're probably going to want to be looking at that. London, New York overlap. I'm looking at euros, Great Britain pound, pretty much everything in the U.S. dollar. So relatively straightforward. We'll talk about that once the kill zone video comes out. Just come back or send me a private message or come back around here to the trading room. There will also be a link there. We'll be linking to a big article that we have written up on that, and that's going to be a pretty good thing to do. Let me see, Joshua. What is that indicator? Yeah, go back, check out last week's YouTube video on how to trade calm. You'll see it. It's going to be the 920 EMA crossover, and we coded it out, and it sort of showed us exactly what to do with our indicators. Purple sell, gold buy, and the trend strength indicator. And if you understand how this strategy works, you can build it into something. All right, Mark Corp, good to see you. Great start to the week. Yeah, not too bad. I think we're ready to roll. One last thing I want to cover, and then we're going to go ahead and sign off. This is a good look at the Nikkei, and it's not the Nikkei. This is going to be our weekly trade idea. This one goes out every Monday on Forex Signals TV. What you're going to want to do is you're going to want to go to your monthly Euro USD. This is a significant trade, I think. That area right up in there, that's a fantastic zone. So if you want the exact trade drawn up, Forex Signals TV on YouTube, go ahead and check that one out. It's our trade of the week. Like I said, if you like, or you don't have to like it, but if you subscribe it, you'll get these beamed out to you every Monday. And then we also have a daily trade idea. Today's was on the US 100, so head on over to How to Trade. We'll recap all that. We'll give you a performance update tomorrow in our Finding Tuesday opportunities. We'll look at the trade ideas, performance update. We'll get you ready to go for the United States Federal Reserve. It's been an active January in the markets. I don't think it's disappointed anyone at all. That's for sure. All right, everybody, I want to thank you for joining me today. I went a little bit long today, but that's all right. If you have any questions at all, head on over to howtotrade.com. Be sure to check out our materials on YouTube. There's some pretty good stuff out there. If you're looking for a strategy, boy, we've put out about 20 of them, it seems like, over the last few months. So get in there, check them out. This week we'll have the ICT Kill Zone video, which is going to be a pretty good one. It's going to be compact and really give you just an idea of how to get up and running with that strategy on both TradingView and MT5. All right, everybody, that's a wrap. Good to see you. Trade the action well. Be very, very careful today. There's a lot going on. Boy, the NASDAQ's getting just pounded. Be careful if you try to pick bottoms, though. It's tough to catch knives. Catching knives is hard. Cuts your fingers off. All right, everybody. Have a fantastic day. Trade the action well, and we'll talk soon. See ya.